Hello and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and let's try and summarize what are the most important factors from a trade perspective today. Remember, at the outset, I want to tell you that the statement from Fitch yesterday and any kind of ratings change by Moody's, Fitch, or S&P would likely be the biggest trigger in the near term for the rupee, for the bond inflows, and thereby for the equity market. So you have to keep that at the back of your mind. However, first, as we usually do, the coronavirus updates. The cases globally top about 3.1 million cases. The deaths have passed the 216,000 mark, and the coronavirus cases in the US passed the 1 million mark. That tells you a story about how bad this pandemic is impacting the United States of America. That's the mother market, really. Europe is seeing mixed signs. So Spain is aiming to lift the virus lockdown within the next 8 weeks. It's one of the most impacted nation, if not the most impacted nation in the European Union, European mainland. And France is going to begin to ease the virus curves with a plan to reopen shops, I think, in about 10, 11 days. So that's something that, well, maybe for the French economy might be good. Let's see if they're able to contain the virus. India has had a mixed numbers. I mean, the numbers keep on rising, and we all know that. So no new surprises there. Let's just wait and watch what happens to the lockdown post May 3rd. That is probably the most important determining factor. However, the world markets and what they have done, I think they have done reasonably okay. The US markets did okay. I mean, they were choppy, you would have to say. But if we just look at what Asia is doing, what the SGX Nifty is doing, or what the US futures are doing ahead of the big events today, then all of them are pointing towards a bit of green on the screen. So the start may be positive. The question is, can it last amidst all this talk of a ratings action by world rating agencies? So that is something that would probably be top of the mind. Crude has had 3 days of a fall in yesterday's session as well, amidst concerns of storage and demand looking bleak. Crude oil came off yet again. In the morning session, it's risen, but the last 3 days have been negative for crude. The question is, can it dip further after the beleaguered levels that it is trading at, or can it see a bit of a respite from these? I mean, 20 and 10 respectively for NYMEX and Brent. These are very abnormal levels, really, or maybe normal levels in the current scenario. You never know. And let's see, maybe that's a bit positive for India because India can do with all the positives that it can get. Speaking of India and the trade setup for the day today, I think the Nifty's closing above Monday's highs. Yesterday, it closed above Monday's highs, should be viewed as a positive. We tested about 9250 a couple of times and then bounced back, went up about 9400 as well, intermediate intraday, closed below it, but closing above Monday's highs is a positive. And I think what is giving fillip to the Nifty is the bank Nifty. Remember, in Monday's trade setup, we mentioned that there is a possibility, outside chance, that money could start moving out of pharma into the battered financial space. It's played to script as per now. I think that for this to extend, now we need HDFC Bank and Kotak Bank to start performing. If these two start performing, then we might have further uptrend. Don't rule out a further uptrend, to be honest, but you've got to be mindful of the fact that one, HDFC Bank, Kotak Bank, and the likes need to start performing now, and two, any kind of rating change might be a big thing. For today's trade, by the way, the other big thing, and I just want to mark a couple of other things as well. First, just look at the max OI on the call and the put side, and that will tell you how undecided the trading fraternity is a day before expiry. 9,500 to 9,000. It's a really broad range. You don't normally have such a broad range on the options side a day ahead of expiry. So you have to be mindful of that. Of course, people are now looking at May, but I'm still believing that April expiry is important this time around. And from the broader end of the spectrum, NBFCs and specialty chemical companies will be the focus. Not just the least what Bajaj Finance and Finserv have done, but some of the others like Chola, M&M Financial in the NBFC space, or the specialty chemical space, the likes of Aarti and Vinati. They had a mammoth run. It'll be interesting to see what they do. And the series thus far has not been too positive from a FI flows perspective. As I said, remember, FIs have sold in the series thus far, the April series thus far, which started from 27 March, about 15,000 crores. And that's not a small number. $2 billion pulled out of Indian markets individually. That's not great. But as I said, watch out for any kind of fears around the rating action. We are all watching out for any kind of measures that come in from the government for the MSME space. And today, we'll watch out for the US Q1 GDP numbers as well as the Fed meet outcome. So will the markets go into the GDP at least in a big gung-ho shape after the big rally that we've seen? Maybe not. So be brace for that. Not too many stocks today. Axis Bank, the NIMs were healthy and the NPAs were lower on a quarter-on-quarter basis. But I think the COVID-19-led disruptions could dislocate the guided ROE improvement trajectory, and maybe the markets would take heed of that. It was not as positive as IndusInd, I fear, and after the rally that we've seen, might be a tepid day for Axis. Not quite trying to predict that. Let's wait and watch. And I just have one more interesting thing to mention out here. Did any of you know that 10 rupees of incremental ARPU is about $400 million of additional cash flow for Airtel? Well, I knew some numbers to this, but Goldman Sachs research put out these numbers in black and white, and you've got to take cognizance of that. It's a stock that has been being beaten down the last few days. Could be an interesting one in the session today. Last but not the least, I want to leave you with Morgan Stanley's Rhythm Desai's note. They've come out this morning and they are cautioning the same thing that I was cautioning you about. They are saying that the bear market may still not be completely over. Financials and consumer staples, which led the previous bull market, may now give way to consumer discretionary and healthcare. They are removing Godrej Consumer, HDFC, and MCX from their focus list and adding Sun Pharma, Apollo Hospitals, and Lupin. So it's all out healthcare for Morgan Stanley in the new run. Of course, they're trimming the financials weightage by 500 basis points to the model portfolio and taking out to a neutral rating. And they're trimming staples weightage by 200 basis points to underweight from where staples are right now. So HUL, Bajaj Finance, financials by and large, staples by and large, over the course of the next 1-2 years, would be interesting to monitor from a foreign inflow perspective, because clients, brokerages like Morgan Stanley have a big saying on what passive funds or India dedicated funds do when they're putting money into India. So do watch out for these names as well. Thanks viewers for tuning into the Trade Setup today. Be mindful of the rally that we've put in behind us and the events lined up ahead of us.